Buyers are getting cold feet, and it's no surprise. We're seeing a record number of cancellations across the board for real estate signings in December. Let's dig into why this is happening. And by the way, I'm at a real estate conference here in Breckenridge, and the real estate investors are deflated. The energy is bad. It's really tough out there for these investors. We're seeing prices coming down. We're seeing demand drop. This is across the board. This is not just Florida and Texas. I know a lot of you say, well, it's not happening where I'm at. It absolutely is happening. It's just looking and showing up in different ways. The margins are getting squeezed. The vacancy is starting to rise, and the affordability crisis is starting to really take hold. But ultimately, right now, we're seeing this. Buyers are getting cold feet and listings are stacking up month after month after month. Now, a little bit in the Northeast is not exactly the same, and we'll go over that data, but here in the Sun Belt, it is absolutely happening. This is from Arbor Data Science. It's the estimated percent of more sellers than buyers actively in the market. And you can see since they started recording in 2013 that we are at a record high right now. There are many people looking to sell, and the number of buyers are starting to back off. And of course, we're going to see that inventory stack, and potentially we'll see prices come down, and that'll bring back buyers into the market. And down prices have a serious consequence mentally for a lot of buyers. Why would a buyer go out and buy a house if they think next month the house will be cheaper? We're starting to see this in Florida occur. And once that sentiment changes, sentiment drives a lot of real estate. Once the sentiment changes, once the math changes, which it did flip flop, it can change the game entirely. So let's see this. This is the closed sales across the board from December 2025. It also, this chart shows the closed sales from December 2019, and then does a little bit of a comparison here on this chart here of what it looks like today versus what it looks like in 2019. Well, you can see in my market here in Jacksonville, Florida, let's find it. Right here, we're down 14.7% in closed sales, and December particularly was not a good year for real estate in Jacksonville. Closed sales, right? The number of sales come down, the pendings are coming down, the active inventory continues to stack, and you can see it across the board. There's certain areas of the country that are experiencing more challenging markets. Look at Denver and Dallas. They're down 32%. Des Moines down 26.3%. Maryland is down 25.6%, right? So there's some areas in the Northeast that are down in the number of closed sales. New Hampshire, New York are down, right? Rhode Island's down, Washington, D.C., and Virginia. So that's the closed sales story. But when you look at the active inventory story, it is different, okay? So those same areas that we're seeing, how much active inventory do they have versus the prior year? You can see that Illinois has 61% less active inventory than they had in 2019. Maryland is down in their inventory. So they're down in inventory and they're down in closed sales. New Hampshire is down in active inventory. New York's down in active inventory. Pennsylvania's down in inventory. Well, part of this is we had that 2020 time period where we saw a lot of relocations out that came to Florida, Texas, North Carolina, areas like that in the Sun Belt. And then we saw that massive migration basically stop in 2022, 2023. And we're actually starting to see now inverse migration where people are relocating back to where they came from. So we understand that real estate is hyper local, it's area dependent due to the local economy, the supply of new construction, right? The Northeast just doesn't have as much new construction as we have down in the Sun Belt, and these migration patterns that we're seeing across the board. But I think it's important to understand real estate is extremely micro, and what we're experiencing here in Florida and Texas, you're not experiencing across the board at this time. However, I will say there's leaders in the downturns, just like every downturn, and then it eventually spreads across the board. The magnitude is depending on these local factors of the local economy. But right now we're seeing this cancellations are at record highs, right? So this is home purchase cancellations. This comes from Data Wrapper. You can see that it was previously in 2020, 16.3%. That makes sense. Now we're all the way up to 16.31% here in December. This is pending sales that fell out of contract as a percentage of pending sales. So why are so many people canceling their contracts? Well, there's a lot of reasons why someone would cancel their contract. Maybe they have another house they need to sell and they're not able to sell it. They can't move. The inspections are coming back and there's a lot of stuff that needs to be upgrading the house. The seller is not willing to negotiate. There's job loss, right? So there's lots of different issues across the board. But what's interesting is you can see there's specific cities that have more cancellations than other cities. Atlanta being number one, Jacksonville, where I am, is number two, and then there's of course San Antonio. So if you're listening to this and you're a seller, your condition really matters. You need to upgrade your house and have it, pristine. If you're actually looking to sell right now, it's worth every cent. Make the house look amazing. talk with your local real estate agent. If you need a local realtor who's a top agent, reach out to me. I'm happy to put you in touch with somebody who can really, make sure your house is prepped for actual sale and is going to maximize its value. My email's down below in the notes. You can go look there. But this is a red flag, right? So now we have the number of buyers declining with the numbers of sellers going up, and the buyers who are buying, we're seeing a lot of cancellations across the board as well. So the story starts to take hold. Now we're starting to see the mortgage purchase application index tick up just a little bit, but historically we are soft. This chart comes from Resi Club, and they're near record lows. But people are getting these applications, looking at how much the mortgage amount is, and they're deciding just not to buy because the prices are too high, the payment is too high, and they think that prices will actually move down in the future. So because their projections of what they think is going to happen next, they're just sitting and waiting. They're waiting for lower interest rates, and they're waiting for lower prices. And this is a big red flag that then, of course, is leading into these pending sales that the pending sales are lower, and we're seeing record cancellations of the pendings that we do have. This comes from Reventure Consulting. It's a great chart that came out, pending home sales in December. You can see this massive drop off in 2022, and now we're at a record low at the end of December 2025. We expect pendings will actually pick up this year because of sellers capitulating and deciding, hey, I'm actually going to just sell my house this year. And I know they rage quit last year trying to take their house off the market, hoping it would get a higher price next year. That's remains to be seen. It's very unlikely because there's a lot of other people who also did that rage quitting. And so they're going to have a lot more competition out there. And we saw in our local market, the active listings go from 2,000 active listings all the way to 12,000. Now we're back down to 10,000. But again, the reason why we dropped to 10,000 was because 20% of the market got fed up and just pulled and yanked their house off the market, and they'll relist it this year. And we're actually starting to see a little uptick in the number of new listings that are out there. And of course, one of the greatest stories out there right now is that the first-time home buyer is disappearing, and the age of the first-time home buyer is now over 40 years old. This is the starting salaries for new grads has been trending down in real terms. I think this is an interesting thing because you need about $112,000 to be able to purchase your first home. This stats that come out for like the median price home, the median payment, all that kind of stuff, you need to make about 112,000. Well, that's got to be a dual income family there, and you can see the starting salaries for people are 54,000. Maybe they work a few years, they save up their money, they get married, they go to look to buy a house, they have to have a down payment, they don't have enough money, and the prices of everything is way too high. So it's dropped. I mean, we're seeing this across the board that home buyers have dropped, first-time home buyers have dropped from 50% all the way down to 20% of the market share now. And I think this is part of the reasons why we're seeing a slowdown in the market. We obviously want these first-time home buyers to start buying into the system, but right now they're priced out. Keep in mind on this pricing out, it's a huge problem, and we call this the affordability crisis. 25% of US households have income to qualify at a typical FHA entry level buyer mortgage underwriting parameters. It's down from 47% in 2019 to 2020. And this chart comes from John Burns Real Estate. So basically, the FHA first-time home buyers are priced out, right? It's a huge drop. It's a 21% drop within just a few years. And where are these entry homes that they're able to purchase? The builders aren't building them. They want those high margins at higher price points. There's a lot of impact fees and other fees that they have to pay to build these entry homes, and the existing homes have just skyrocketed. And that has caused the first-time home buyers and the FHA home buyers to be pushed to the sidelines. And honestly, I'm worried about those FHA buyers who've been buying the last 2 to 3 years and even today, because they're putting such a little piece of equity down, usually just 3.5%, and they're highly leveraged on these houses that are likely to come down in price in the future. And here's the chart you wanted to see. So this is the share of the first-time home buyers declining, right? And this is a huge red flag for the market, and obviously it tells the story of affordability. And of course, this makes sense after we had the largest bull run in history in the shortest period of time due to the zero interest rate policy of the Fed just propping up all the markets during this time period and pushed it into this bubble format. Now they're trying to deflate the market as much as possible, right? They raise the rates to slow down inflation. However, there's going to be an adjustment period, and we're seeing that adjustment period, and it can happen over years, right? Real estate isn't a liquid asset. It can take years for this to play out. But ultimately, when you look at this chart, you ask yourself, hey, is it now a really good time to buy with high leverage? The answer is probably no, and that's what the first-time homebuyers are saying. It's like, "Hey, this is a risky time to buy. I don't wanna go underwater immediately and buy at the wrong time. It makes more sense for me to just sit on the sidelines, wait, and see when that opportunity comes up, and that means prices will come down." And of course, we're starting to see this here in my local market. This is the monthly buyers versus seller dynamic. This comes from Redfin data, which I think is fantastic. You can see this chart here. The number of sellers has increased dramatically. The number of buyers have decreased. We're seeing a little pop now because of rates that came down, increasing affordability. And then we saw a lot of people. You might say, "Hey, this is great. The number of sellers is starting to decline." Well, this actually is not the truth. It's actually because people were rage quitting during those months and taking their house off the market, as I previously explained. So we expect this gap to actually widen going throughout the year. But it all depends on rates. If rates come down for a significant period of time, they will drive the buyers back into the market. Those marginal buyers are extremely price sensitive to interest rates right now. So we see interest rates come down, boom, we see a flurry of demand. We see interest rates go up, we see just a pause in demand. So look, real estate used to make sense a decade ago when you were buying back in the day. There were more buyers, and the numbers made sense where you could buy a house and it would save $300 to $500 a month versus renting. It's now flip-flopped. It's the exact opposite, where now it costs more to own than to buy, and that's why the first-time home buyers, you know what? Hey, maybe I'll just sit and rent a luxury apartment with these great amenities, negotiate the rents because we're overbuilt on rents. And this, of course, is happening locally in Jacksonville, but it's going to spread across the board where there's a ton of new construction and there's a lack of migration because now we're having migration issues here in Florida as well. We're not seeing as many people move here as we saw in prior years. And of course, we're familiar with big declines here in Florida. So we saw in Jacksonville 40.4% decline, saw Tampa with nearly 50% decline, Miami 52% decline. We have seen these boom bust periods here in Florida and California, these speculative markets. And when the numbers stop making sense, that's a big red flag to pause and say, "Hey, should I be buying right now or should I be looking to do other things?" And the main things to look for is a massive speculation, too much construction, and we're still seeing construction go on now, migration pattern changes, and of course, right now, the affordability that's driving those first-time home buyers and the locals out of the market. So you have to ask yourself, "Hey, who is the next buyer that's going to come in and purchase my house?" And so once they see the numbers, they decide to wait and rent, right? So the cost to buy, look at this. This comes from buying versus renting in America. I think this is great from Visual Capitalists. It's more expensive to buy than to rent. That hasn't always been the case. There's periods of time where, hey, it makes a lot of sense to buy. This is when I was buying 2014 all the way up to 2022, and then it stopped making sense to buy, and boom, we turned it off. The numbers no longer made sense in our market. I'd love to hear from you. What are you expecting in the market this year? Where are you located and what are you seeing on the ground? If you have any questions, drop them below. If you want me to look at a specific market, I can do that as well. If you're looking for a real estate agent that actually knows what they're doing, reach out. I have my emails below and I'd love to connect with you. As always, I talk about things offline on Substack that I can't talk about here on YouTube. You can always subscribe to my Substack. It's johnbrooks.substack.com. Look forward to connecting with you. Thanks so much for watching.